For more on the markets now, following its record highs this week, let's get to Blanke Schein, Wealth Management Chief Investment Officer, Robert Schein. Robert, it is good to see you. So looking through the notes, I mean, you sound broadly constructive, right? 8,000 by year end. How come, Robert? Like, what keeps powering us higher from here?
We're seeing it play out right now. The bedrock of this market are corporate earnings,
which have been very impressive.
And coming into the year, the projection for the S&P 500 was 8%. Now we're double digits. If you take out, if you just look at technology, it's instead of 20% by the S&P, it's 40%. So earnings are accelerating moving forward, and that's one of the reasons, that's the reason why we're seeing all-time highs once again, given the weakness that we saw in June and July.
How much of that good news do you think is priced in now? How expensive broadly does this market look to you?
Given our year-end target, we're very close, right? So 8,000, and we're inching higher. We could see the market incrementally grind its way higher. There's some, seasonality. There's always from August, to October, markets pull back and potentially a year-end rally. But at the same time, how much is actually priced in? It all depends on quarter by quarter earnings reports. The guidance is accelerating. The earnings are accelerating. The PEs are actually coming down.
You talk about here moving from AI build out to AI payoff. What do you mean by that, Robert?
So the AI payoff is everything that we're seeing right now. If you look at, so let's take, rewind for a minute, going back to last week. We saw, some pretty good confirmation from Amazon, right? We actually saw the AI space is profitable. The cloud space is profitable. If we look at Microsoft, they're converting, right? So the Microsoft 365 Copilot, they have 30 million new users, and now they have 250 million that they can still convert, like internally, right? And so those two companies, which are the Mag 7s, which have lagged. I mean, I've been talking to my clients for a good long time about Amazon, saying just be patient, because the acceleration will happen in companies like we just spoke about. And so we're seeing that continue to play out, and that's sort of the profitability. Clients and investors need to be patient as the investments are taking hold, but we also need the litmus test. We need the confirmation from earnings of these companies and their guidance moving forward that AI is actually working. And it is. It's profitable moving forward. Maybe not as much as people wanted to at this moment in time, but just give us some time and patience will win out.
No, you can see AI contributing to those cloud businesses you're pointing out. You also like Amazon and Alphabet because they have strong businesses outside AI, right?
Yeah, outside the cloud of AWS, but you're also seeing, let's go back to Microsoft for a second, Azure, right? You go to this year and, the cloud, they were a 4% growth rate. Now it's 43% growth rate just in that category right now. And Amazon itself is firing outside of just the cloud on all cylinders. And they're seeing scalability, and they're seeing that pulled through. So, I think both those companies, even Google itself, the Mag 7, are looking pretty good in terms of a valuation standpoint, because the earnings are expanding.
Yeah, Microsoft too, telling you they're going to remain cash flow positive despite higher capex.
That's the key. That's the key right now is that those that are going to win are preserving that net free cash flow, right? So Microsoft didn't go all the way. They left some gas in the tank, and I think that's most important right now. And the Wall Street is rewarding those companies that are at least preserving the cash flow. But that cash flow has doubled for all of those companies in the Mag 7 in the last 5 years. Like literally that war chest of cash flow is, either they're going to put it in the bank and wait for market opportunities or acquisitions, or they're going to put it to work because it's that free market. Like if you're spending money, I'm going to have to spend money, and I can't be left behind. When
your clients ask you, Robert, what are the risks on your radar? What do you tell them? What's front and center?
Well, it was like a week ago. It's like, okay, what's the new Fed chair going to do? But, give him, he's 2 months in the seat right now. All the economic data that we're seeing, consumer strong, market strong, earnings are strong. Labor market is kind of, moderating. We're going to see what Friday's labor market report looks like. But you could see playing out higher interest rates later this half of the year end. You could see midterms coming into question, right? Later half of this year. And then it really comes down to corporate guidance. Like what are the companies going to say moving forward in terms of the exponential growth that we're seeing on earnings, both top and bottom line. So, if you had to rank file those right now, I would say, the market's already doing the job of the Fed, right? The interest rate market. So the yield curve is sort of, it's moderating now, but last week when Kevin Warsh was talking, we saw the change rapidly. So interest rates sort of priced in. We can see those higher. Midterms, it depends on what Washington looks like, right? Do we have a sort of the next 2 years do nothing? And I'll argue that's not too bad, because when you have a divided Congress, we stop spending. That could help interest rates in the long term, right? So that could be one of those things. But I mean, right now, it's just the guidance of corporate earnings.
I'm just curious, how much, if at all, Robert, are your clients asking you about Iran, geopolitical conflict? And if so, what are you telling them? Or is it off their radar? Are they shrugging that off?
No. We're getting that call every single day. And it's a rightfully to be concerned. And what I basically counsel them on is like, listen, the market, if you look at the oil markets, it's very volatile, right? We're seeing that volatility week to week, but longer term, look at the contracts, it's seeing through this conflict. This conflict's not going to, now it's going to cost the U.S. an arm and a leg. We're going to continue to spend. And that's why we also like, from an investment standpoint, we basically tell our clients, hey, listen, we like defense, right? Our RTX is one of those, our defense, no one in Congress is going to happen to vote against rebuilding our war chest. So there's defense, add defense to your portfolio. That's sort of like a value add when clients ask. But if you look at the oil markets, they're telling us longer term, this is sort of a 2026 event. Hopefully it doesn't go to 2027. That's what we're seeing.
All right, Robert, great to see you, especially on set. Thank you.
Yeah, great to be here. Thank you.
Well, for
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.